Have you ever been trapped in a loan pitfall? This might sound like a scene from a suspense thriller, but it's a reality that many people face when dealing with loans. So, what exactly is a loan pitfall? Well, it's a situation where a loan, instead of helping you financially, becomes a burden due to high interest rates, hidden fees, or unfavorable terms and conditions. Imagine you're in dire need of funds, and a lender presents an enticing offer. You see the solution to your financial woes, but hidden beneath the surface of this seemingly perfect solution are high interest rates that could keep you in debt for far longer than you had planned. Or perhaps there are hidden fees lurking in the fine print of your agreement, ready to spring into action and drain your wallet when you least expect it. Then there are the unfavorable terms and conditions. These could be anything from a clause that allows the lender to increase the interest rate during the loan term to harsh penalties for early repayment. All these factors could turn a seemingly helpful loan into a financial nightmare, trapping you in a cycle of debt that's tough to escape. So, why do so many people fall into these loan pitfalls? The answer is simple: lack of understanding. Many people jump into loan agreements without fully comprehending what they're signing up for. The fine print is ignored, the complex financial jargon is glossed over, and the consequences of failing to meet the terms are often not considered. This lack of understanding can lead to devastating financial consequences. But it doesn't have to be this way. Knowledge is power, and with a solid understanding of what to look out for, you can avoid these pitfalls and make your loan work for you, not against you. So if you've ever felt overwhelmed by the prospect of taking out a loan, or if you've been burned by a loan pitfall in the past, you're in the right place. But fear not, today we'll discuss expert tips on how to avoid these loan pitfalls. So, stick around, because this is information you can't afford to miss. Knowing what you're getting into is half the battle won. This adage rings especially true when it comes to understanding loan terms. In the realm of finance, being well-versed with these terms is not just an advantage, it is a necessity. Let's start with the term interest rate. This is the cost of borrowing money. It's what the lender charges you for the privilege of using their funds. The interest rate can either be fixed, meaning it stays the same over the life of the loan, or variable, meaning it can fluctuate based on changes in the market. A lower interest rate could save you a significant amount of money over the term of your loan. Next up, repayment terms. This refers to how long you have to pay back your loan and how often you make payments. It can range from a few months to several years. The length of your repayment term can significantly impact both your monthly payment and the total amount you end up paying back. A shorter term means higher monthly payments, but less interest paid overall. Conversely, a longer term means smaller monthly payments, but more interest paid over the life of the loan. Lastly, let's talk about fees. These are the extra costs associated with your loan. They can include origination fees, late payment fees, prepayment penalties, and more. These fees can add up quickly and significantly increase the cost of your loan. Always read the fine print to understand what fees you may be charged. Now, what happens if you don't fully understand these terms? Well, you could end up with a loan that's far more expensive than you anticipated. You could find yourself unable to make your monthly payments, leading to late fees, a damaged credit score, and even the risk of default. It's crucial to understand these terms before you sign on the dotted line. Ask questions, do your research, and don't be afraid to walk away if a loan doesn't fit your financial situation. Remember, knowledge is power. Understanding your loan terms can save you from a world of financial pain. Don't just settle for the first loan offer you get. This can't be overstated. It's like walking into the first store you see and buying a pair of shoes without checking if they're the right size or even if you like them. Now imagine doing the same with a financial commitment that could span over several years. Not a pleasant thought, right? In the world of loans, not all offers are created equal. Different lenders have different terms and conditions, and these can significantly impact your financial outcomes. Let's think about it in terms of a jigsaw puzzle. Your loan is not just one piece, it's the whole picture. And each lender is offering you a different version of that picture. Interest rates, for instance, can vary widely from one lender to another. Even a small difference in interest rates can lead to substantial savings over the life of a loan. For example, on a 30-year mortgage, 0.25% difference in interest rates can save you tens of thousands of dollars. That's a lot of money that could go towards your retirement, your child's education, or even that dream vacation you've been planning. Then there are the fees. Some lenders charge origination fees, processing fees, underwriting fees, and a whole list of others that can sneak up on you. Shopping around can help you find lenders who are transparent about their fees, or better yet, those who don't charge them at all. Lastly, the terms of the loan itself matter. Loans aren't just about money, they're about time. A longer loan term might mean smaller monthly payments, but it also means more interest paid over the life of the loan. A shorter term might mean larger monthly payments, but less interest over time. So, take your time, research, compare. Don't be afraid to ask questions. It's your money and your future at stake, and you deserve to have all the information to make the best decision. Shopping around isn't just for clothes or gadgets. It's a crucial step in securing a loan that works for you. So don't rush, take your time. And remember, the best loan is the one that fits you perfectly, just like a well-tailored suit. Your credit score isn't just a number, it's a key factor in your loan journey. Imagine it as a financial passport, influencing your journey through the complex world of loans and credit. This 3-digit number is a snapshot of your creditworthiness, an indication of how likely you are to repay borrowed money. The role of your credit score in determining loan terms cannot be overstated. Lenders use your credit score to decide whether to lend to you and at what terms. A high credit score can unlock better loan offers with lower interest rates and more favorable terms. It's like having a VIP pass to the best financial deals. On the other hand, a lower credit score can lead to less favorable loan terms. You might still get the loan, but you may have to pay a higher interest rate or accept less favorable terms. It's like trying to get into a club with a long line and a strict bouncer. You might still get in, but you'll have to wait longer and pay a higher cover charge. So, how can you improve your credit score? It's simple, but it's not easy. It requires discipline and patience. First, always pay your bills on time. This is the single most crucial factor in determining your credit score. Second, keep your credit utilization low. That means don't max out your credit cards. Try to use less than 30% of your available credit. And third, don't apply for too much new credit at once. This can make lenders think you're desperate for cash and therefore a higher risk. Remember, your credit score is like a financial reputation that follows you around. It takes time to build a good reputation and even longer to repair a damaged one. But with consistent effort and good financial habits, you can improve your credit score over time. A good credit score can open doors to better loan terms, so make sure to keep yours in check. Let's recap what we've learned today about avoiding loan pitfalls. Our journey began by understanding the intricacies of loan terms. It's crucial to be aware of the fine print that accompanies any loan agreement. From interest rates to repayment schedules, each term holds significance and can have a profound impact on your financial health. Not fully understanding these terms can lead to unexpected surprises down the line, so it's always best to be well informed and ask questions if anything is unclear. Then, we explored the importance of shopping around. Loans are not one size fits all. Different lenders offer different terms, and the first offer you receive may not always be the best one. It's worth taking the time to compare different loan options, considering factors such as interest rates, loan period, and additional charges. By doing this, you can secure a loan that is tailored to your needs and financial circumstances. Next, we delved into the role that credit scores play. Your credit score is a reflection of your creditworthiness and can significantly influence the terms of your loan. A high credit score can unlock better interest rates and more favorable terms, while a low credit score may limit your options or result in higher costs. Therefore, maintaining a good credit score is vital in securing the best loan deals. In conclusion, understanding loan terms, shopping around, and maintaining a good credit score are essential strategies in avoiding loan pitfalls. Each of these aspects is a piece of the puzzle that, when put together, can help you secure a loan that works for you and avoids unnecessary financial strain. It's not about rushing to get a loan, it's about taking the time to make informed decisions. Avoiding loan pitfalls is all about being informed, diligent, and proactive. Remember these tips the next time you're in the market for a loan.